Hello traders, it is Sunday, May 19th, and it's time for our weekly trading video. As always, I want to start with our previous picks so that you can see how well the picks did, and then we're going to go through the process, the systematic trading approach that I teach. We're going to find new trades, evaluate the market, and then we'll recap those in the next video. That's how you can get a feel for how effective this systematic trading approach is. Netflix, that was the pick that I showed you a week ago. You can see on the daily chart that the stock is currently compressing. It has horizontal support just below this compression, right at the 50-day moving average. The EMA 8 has had a chance to catch up. That's great. We're above the 100-day moving average. We're above AVWAP-E. We are in striking distance of the all-time high. I like Netflix. It just hasn't moved quite yet. Still has relative strength, so everything's on board. How would I handle Netflix? And it does tend to be a spurty stock. It's dormant for a while, and then you get, boom, one of these big moves, and then it's dormant, and then you get another breakout. I believe this next breakout is going to challenge and break through the all-time high. So what do we do with this information? We click GTC, and we can click on the high from Friday. And we get a breakout here. We'll easily test that breakout at an all-time high. So you would buy in here. You would wait to see the breakout. When you have the breakout and you have confirmation that that breakout is going to hold, then you would add to the position. So there's an opportunity for us to enter initially and then to wait for confirmation on the breakout and then to add to the position. I like Netflix. During the live event that we recorded on Wednesday, SMCI was the stock that we highlighted. I still like it. This downward sloping trend line was breached to the upside. We had this long green candle, also penetrating the 50-day moving average, above AVWAP-E, above the 100-day moving average. So everything looks really good for SMCI. But the stock really hasn't done much. And if we go into a 15-minute chart, the Wednesday video was right in here, and you can see the stock is a little bit lower than it was during that video. Call a spade. Right now, with 2 days after that live event, the stock is down, so wasn't the best pick. Now, I do suggest that you exit SMCI because this week we have earnings from Nvidia. And let's take a look at Nvidia. That is definitely going to impact the price action this week. I'm going to zoom out. We'll hover over the E. 522 is when we have earnings from Nvidia after the close. So that is Wednesday. So you do have time on SMCI to put an order out there to try and scratch the trade wherever you might have entered. Not looking for Nvidia or SMCI to make any major moves ahead of that earnings announcement, but we don't like to hold positions over earnings. SMCI is very close in nature to what Nvidia does. They are both chip makers, both involved in the artificial intelligence arena. So let's wait to see what that earnings reaction is. And by all means, if you get a nice breakout through this downward sloping trend line in Nvidia, it will also take out this horizontal resistance level, the blue line, and you'll see continuation higher. This is really important for the market as well because Nvidia is a mega cap tech stock. Everyone has been wanting to buy artificial intelligence stocks. So the interest in Nvidia's earnings is going to be widespread. This upcoming week, and we'll get into market analysis now, we don't have a lot of news coming out this week. I think there's one economic release, but it's very light. You have durable goods orders, I think, is on deck, but really nothing else that would have any material impact on the market. Actually, I think it's FOMC minutes come out this next Wednesday. We've had Fed speak almost every day since the FOMC statement, so there shouldn't be any surprises on where the officials are. The Fed did reduce quantitative tightening, so that is a form of easing. They seem to be a little bit more dovish. We're going to be watching the next round of economic releases very, very closely, but we've got about 2 weeks before they start coming out. So what I'm going to do today is I'm going to paint a little bit of a longer term picture for you with regards to the market so that you know how to plan ahead. So we have this upcoming trading week, not a lot of news. We have Nvidia earnings, that's going to be very important. Then we have FOMC minutes on Wednesday. Shouldn't be too much news in that. And then all of a sudden we start getting ready for the Memorial Day holiday. So what? What does that mean? Well, that means that we're going to see lighter trading action after the FOMC minutes are released and after Nvidia earnings after the close Wednesday. So there's a very good chance that Friday is going to be a relatively lackluster day. As we get into the week after Memorial Day, we have typically what I would call a holiday hangover. So Tuesday when we come back, the action is also likely to be pretty dull and lackluster. And so that week, that's when I believe we have durable goods and GDP. This will be our second look at GDP. So typically the first look at GDP is the one that has some market movement after that release, but by the second and third looks, not so much. So that week also should be fairly light post-holiday trading. So finally, when we get into the first week of June, there we have major economic releases. We're going to get ADP, ISM manufacturing, ISM services, the jobs report. And so far, by the way, regarding jobs have been pretty good, and I'm gauging weekly initial jobless claims, and they've been hovering around the 220, 225,000 level. That's excellent. That bodes well for the jobs environment currently. Now, the reason that the economic news is so important to us from this point forward is that we have started to see some kinks in the armor. GDP came in at 1.6%. That was about a 2% decline quarter over quarter. That is substantial. We saw ISM services fall into contraction territory when it was released a month ago. Okay, that's a little concerning. So the jobs report came out 175,000. That was considerably less than the 250,000 that the market had been expecting. So we're starting to see a little bit of problems, some economic softness, and that should prompt the Fed to ease. The issue is, will they be dovish enough? And what the market will be watching is that the Fed starts to take their foot off the brake and to become a little bit more dovish. If the market doesn't sense that the Fed is ready to cut rates, you're going to see some risk off if economic numbers start coming in light. A lot of time between now and the jobs report, so you'll have plenty of commentary from me between now and then. And typically what happens, so the picture that I painted you is that we are going to be heading into a holiday. We have a very light news environment. The action's going to be fairly dull. And from a technical perspective, we have a breakout to a new all-time high. So let's talk about the technical side right now. We know that we had this super strong rally from November through March. We took risk off April 4th on that long red candle, and we went to the sidelines. We knew that we were going to get a bounce after a dip, so we wanted to evaluate the dip. It lasted about 2 weeks, so it was relatively short term. It was not very deep. It found support above the 100-day moving average, and that would be consistent with a nice bounce. Do you remember all of the traders and how negative the headlines were and how everybody in here said, oh, this market's going to fall apart. We're going to have a correction of 20 or 25%. Now, not everybody said that, but certainly there were enough traders out there casting doubt on this market. And they viewed this big rally as all fluff and we were just going to fall apart. There was nothing to justify that type of selling pressure. All of these buyers here have been waiting for a dip. So our tactic in here was to day trade both sides. We found some really nice opportunities to short because the market would gap up, close on the low. Gap up, close on the low. Gap up, close on the low. Lots of overlap and lots of retracement. So we were able to catch this whole move, but we did not swing trade from the short side. Why not? Because the risk of a snapback rally was too great and we were focused on the bounce for our swing trades. As soon as we got it right in here, we were getting long with the first stage, our starter positions, if you will, for swing long positions. So then we had a test of support and we made higher lows. Fantastic. This is consistent. This is confirmation for our starter long swing positions. Then we were waiting for a breakout above AVWAP-Q and the 50-day moving average. We got it. This is where we added to our swing long positions. Now we were waiting for a breakout to a new all-time high. And we got it. But we don't add on the initial breakout. So we don't make money on the breakout, but that's what gets stocks on our radar. That's what interests us for the S&P 500, but we need to make sure that this breakout is going to hold because oftentimes you'll see this breakout bar and you'll lure in a lot of bullish speculators and then blam, you get a red bearish engulfing candle off of the high. So this breakout was a false breakout. And once you start flushing out these bullish speculators who got long here, you'll see pretty nasty backside to it. But that's not what happened. In fact, what's happened is exactly what we would want to have happen from a bullish standpoint. So we get this breakout, and now notice how this long green candle here, we have been able to preserve more than half of it. So right now, today, Sunday, May 19th, I would feel very comfortable come Monday adding to bullish swing positions. And when you have a very light news environment, that tends to favor the current trend because no one is going to stand in the way. And what I believe we're going to see over the course of the next 2 weeks, so this week, I expect to float higher on light volume, and then the week after Memorial Day, I expect us to continue to float higher on light volume. Why on light volume, Pete? Well, what has the volume been like since we started the bounce? It's been light, and you can see that this entire way. So there's no reason to think that all of a sudden in a light news environment that buyers are going to get excited and that the volume is going to explode. And so what I'll be watching for is I like being long. As the market continues to float higher on light volume, I'll be watching for compressed, tiny bodied candles and a little bit more sideways action. When I see that, I am not, I repeat, I am not waiting for the first long red bar. I'm going to be scaling out and taking my gains on longer term swing positions. We bought here, we added here, we added here. We'll take profits up here, and our average cost will be way down here. Those will be very nice gains, and we'll have a pretty substantial position on at that time. That's how I'm going to be playing it. And if you take a look at previous price action that might suggest this dip is coming, I'm going to go back. I might have to go back a couple of years. This isn't a bad example. You start floating higher and now you're getting this patchy kind of price movement with some red candles mixed in here. You get this spacing, and you'll know by watching my videos in March that we were going to the sidelines. This was a sign that momentum has stalled out and that a dip was likely to come, and then that was confirmed with that long red candle. But I'm going to go back to a previous time when we had all-time highs, a gradual drift higher on light volume. This is just such a good example in here. So you get this dip, now you get your rebound, now you get a new relative high, and then you get this kind of price action. You're still moving higher. That's when you can start expecting a dip. You get your dip, you get long, you start your positions out here, you get your breakout, you add here, you can add on confirmation. But as soon as you start to see this momentum stall, you take gains on your long positions. Same type of pattern in here. Now look at these tiny bodied little candles. This is a decent move. This is not a bad move in here. So you want to be long for this, but you also want to take gains when the move starts getting a bit extended. Another really good example right in here. So you get this release, new all-time high, just can't get going. Look at the volume. Very, very light. So that's what I'm looking for. And in fact, this time period right in here coincides with the time period that we have coming up. This was June of 2021. So you can see this is the type of price action. We want that follow through, but as soon as it starts to lose its momentum, we're going to be taking gains. We'll have some nice gains. So that's how I see everything laying out. I'm going to go into a 5-minute chart of the S&P, and we're going to take a look at this awesome day that we had Wednesday after the CPI. Now, mind you, CPI came in at 0.2%, 0.3% was expected. We didn't have that big a drop in CPI to justify a gangbuster move like this, but once the momentum was set, there were probably some shorts that had to cover once we broke out to a new high, and that kind of fueled the action higher. But very nice, consistent price action continued to float higher all day long. This is a bullish trend day. This is the type of breakout that you want to buy and you want to add and you want to add when you have confirmation. Technically, no dips, very tight price action, well above VWAP, decent volume, continue to float higher. You want to ride this as long as you can, and you want to buy when we had the breakout to a new high. You want to add, new high, compression, new high, add in here, and now you're in a position to ride the move higher for the last couple of hours. That's how you should have traded it. And so now, what would we expect to have happen on Thursday? When you get a very large market move, you're typically going to have a day of rest. And sellers that we saw during the month of April are going to have some say in the matter. So the first move on Thursday was to move higher. And then all of a sudden, we get this long red candle off of the high. Okay, it almost engulfs 1, 2, 3, 4, 5, at least 5 green candles. This is your sign that the market has hit resistance. Now we try and get back to the high. Double top right here. So that set a bearish tone for the rest of the day. And if you take a look at the type of price action that we got and the type of price action that we would need to be very cautious of from a long standpoint, is you get this little compression, blam. This long pink heavy volume candle in here. Okay, one candle does not scare us. What would scare us and what would be concerning is red candle, red candle, red candle, red candle, steady, persistent selling. These one-offs can easily be program related. It could simply be that bullish speculators are getting flushed out, that they had their stops here below this compression. There's another long red candle near the close of the day. So these don't concern us. And we didn't have the type of sustained selling pressure that would tell us that, hey, you know what? Maybe we're on the wrong side of the market. Maybe the selling pressure is getting very, very heavy. So what happened on Friday? You can see mixed overlapping candles, very choppy price action. We didn't go anywhere. And then toward the end of the day, we get this drop here and an immediate bounce, and a nice bounce right back into the range. And so this was actually a very bullish sign as far as I'm concerned, because we were expecting that at some point the bid is going to be tested. And once we have that confirmation, once we test that bid and find support, then we know if the selling pressure was not heavy, that buyers are still interested, buyers are engaged. And how much of that long green candle did we give back? Hardly any of it. So there's your long green candle right there. This is a 1 hour chart, and we preserved more than half of it. So we rallied from here to here, and we really didn't pull back much at all. And now that support has been established, I'm expecting Monday or Tuesday, we're going to start to really form that support, and we're going to start to move higher. Volume's going to be pretty light. The path of least resistance is higher. So we'll go back into the daily chart one more time. We've got that breakout to a new high. Beautiful. We're preserving most of this long green candle. So I've told you that I like the market. I've told you that I like the fact that this long green candle is preserved. The halfway point being preserved was our most bullish scenario. Even if the open here had been tested and the open of that long green candle held, that would still be okay. But we want to see this follow through buying happen this week. The longer we muddle around and go sideways, the greater the chance that we do get a red candle in here. So as far as the trades that I'm going to be showing you, I want to see that follow through buying Monday, Tuesday, Wednesday, one of those days in there for sure. Also, FOMC minutes, Nvidia, Wednesday. Very important that we get that move higher before the end of the week so that we can continue to float higher. That will also set the table for the market moving higher after Memorial Day. And so sellers are not going to stand in the way. We're making a new all-time high. What fool would want to short a new all-time high? There will be some people out there doing it, but not seasoned pros and certainly not institutions. So look for a gradual float higher. When the market does hit resistance, and I'm looking more towards that first week in June, June 1st, June 2nd, that's when I'm going to be taking some risk off, and then I want to just evaluate the economic news releases that come out. So that's how we'll be playing it. I'm going to be taking a look for some bullish trades, and in fact, I'm going to go to my favorite swing trading search, and this is Green Royal Flush. And at the very top of this search, you'll see CRWD. And if you watched the live event from Wednesday, I was back and forth on, do I take CRWD as my long of the event, or do I go with Netflix? I chose Netflix. CRWD was a little better choice because you can see that Wednesday it continued to move higher, closed on its high, barely pulled back at all on Thursday when the market did pull back, and on Friday the stock continued to advance. Let's go into a 15-minute chart, and so that's where the live event was, and let's do an overlay of SPY. And you can see SPY down, 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 stock treading water, and now moving higher. That's the relative strength that we want. That's the tell that institutions are in there buying this stock. CRWD is your long pick this week. I like it tomorrow. Why would I want to trade it? When would I want to trade it? When would I want to be careful with it? So we're looking for the market. We want that follow through Monday, Tuesday, or Wednesday. We want that new all-time high. If we get it, then we want to buy CRWD. If you see the open from this long green candle last Wednesday, and let's get the low here. So the low from the day was, call it 525. If we see a long red candle that closes below 525, very important, closes, not trades, closes below 525, then we would not want to be putting on our final leg of our bullish swing trades, and a close below that level, if we had put on the final leg, would prompt us to take that leg off. We can still leave two legs on and make sure that this horizontal breakout, it could be tested and then we could go. So as long as that holds, we're still okay. So again, important that it closes below that 525 level, because intraday, anything can happen. And when you're swing trading, you need to have these candles complete, because what looks particularly bearish early in the day could change in character completely by the end of the day. So we don't want to be head faked. So we base all of our decisions on the close. So 5 minutes before the close, you take a look at the SPY. If it's still above that 525 level, you would stay in the trade if you had entered and you get a little bit of a market pullback. I'm not expecting that, but it's always good to have your game plan in place so that you know what you would not like to see. So I'm expecting that breakout. Those are your marching orders. I am going to run a search very quickly, and I'll show you one that I ran just to take a look and see what I could find. And so we're going to go into option liquidity. We're going to have a value of -2. These are liquid options. I'm going to be looking for a stock that has recently announced earnings. So prior earnings were a day ago to 20 days ago. So the company recently announced earnings. I would like that stock to be above AVWAP-E, and I would like to have it strong relative to the market. So very quick recap: relative strength on a D1 basis, good option liquidity, stock has recently announced earnings, and it's greater than AVWAP-E. And there is your list of candidates. And I'm going to move this off to the side so we can flip through these. I'm going to go to daily chart. I'm going to take off the SPY overlay so that it doesn't obscure our charts. We'll take a look at what we've got here. There are not that many candidates. I like this breakout for ANET. It's a bit above that EMA 8. We want to have it closer to it. And if it can find support and maintain its relative strength, I think ANET will be very nice. ASTS, kind of a cheap stock. Just going to click through these. I don't like retracement like that so quickly. This looks, could be a little buying climax in here, so you would not want to rush in. You want to get back to that EMA 8, FIS. Very nice breakout. I like this stock. This looks really good. JCI, very nice breakout. Scroll back. That is a nice trendline breach. That is a nice breakout. Still room to that trend line. This is a nice looking stock. Good relative strength. KCG, KGC, really nice breakout. Gold, good breakout last week. Silver, good breakout last week. Qualcomm, earnings after the close, gap up, new high. And this is kind of a good example because you get your gap up and then sellers are trying to knock it down and they're testing the bid. And right here, you tested almost the open from that post earnings candle, but found support above it. You got close to that EMA 8. That was your opportunity to take a long in Qualcomm when it opened low and closed on its high of the day with this nice green candle, and it's above AVWAP-E. That would have been a great entry point. So right now, I like Qualcomm, but I want to see it closer to that EMA 8. And if it comes back and touches it, I think that's going to be a really good stock and a decent entry point. So I'm going to end with that. And VOD, very choppy. This is a decent breakout. It's been able to hold that breakout. Still has some horizontal resistance there. So I can find many better stocks than this. CRWD, that is your bullish long for the day. And by the way, if you haven't been able to attend our live events, please try to do that. We hold them midday. I'm going to be having a live event Tuesday this week as opposed to the normal Wednesday live event. So please make sure that you join us. We address lots of questions that you ask us, so there's a good chance that the questions that other traders have, you'll also have. So we'll look forward to seeing you during that live event. Watch for some decent price action, bullish price action, Monday, Tuesday, Wednesday this week. The path of least resistance is higher. We have a very light news environment. I'm looking for this breakout to have held and for us to continue to advance higher. Thanks so much. Trade well. We will see you Tuesday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.